So this is my 13th year of doing this position your portfolio, which, I mean, we'll see. I don't know if that's ominous or not. I'm not superstitious, but we'll have a better sense where that all fits together in a year's time. As always, I'm going to first look back at what I said a year ago. Then I'll look to what I think the big themes are going to be, and then we'll put a head in a block, give some predictions, give some stocks, etc., that I think are worth having a look at. I have 66 slides, which means I've got 54 seconds per slide. So let's get into it. Yeah, no beating around the bush. So what did I say last year? I said a lot last year. I said gold all-time highs. Man, I was not expecting 4,400. If gold had gone to 2,800, I would have thought I was a clever oak. I said local GDP to hit 2%. I could fudge it and say the year on year, but truthfully, you know what, that GDP number we got a couple of weeks ago, we all loved it, but man, that bar is low. Like the bar is like, did you pass matric? Well, no, but I did go to school. Like, yeah, okay, like the bar was low. I mean, our GDP, yeah, the bar is low. Rand to be better than 17. We had 16.99 last month. If you want to be hated on Twitter, tell people what the Rand is. They hate you. Whatever. Anyway, Rand is under 17 as we speak at 16.99. It went down to 16.92 last week. I said we'd get off the grey list, and we indeed did. I also said we'd get a ratings upgrade. I was a little optimistic in that regard, but we got the ratings upgrade. To be clear, we are still junk, but we're junk and going up instead of junk and going down, which must be good, right? It must be better, I suppose. I said prime would be 10.5. We got to 10.25. I said Fed funds rate would be 4. That is spot on where it is. We've seen the interest rate cuts. Our SARB MPC has given us 1.5% of cuts, perhaps a little more aggressive than we had hoped for, but absolutely we will take it. I said top 40 will be green. Man, if you told me 30% and plus 50 in US dollar, I would have thought you were crazy. We will take it. I said US markets would fall and then rally to end the year under 10. Well, I was right about the fall. I was right about the rally. I was wrong about the under 10. I think the S&P is 16 or something %. We'll get to that. Quick point of fact, all my data I'm showing you today is from close on Friday, 5 December, because I wasn't going to spend my Monday updating all the data. I said inflation would get under 4.5 and US would be over 2. US inflation has been above 2%. I said that the US has been above 2% now for 5 years. I wonder if the FOMC, Federal Reserve, is not now pondering that actually their target is kind of 3. They haven't said anything, but maybe the target is 3, particularly as they are cutting rates. The big story, of course, is that we got a new inflation target. Initially, it was anchoring, and the MPC threw the National Treasury under the bus, and the National Treasury came to the party. I think that is probably the inflation target of 3%, which has been the previous band has been in effect for over 2 decades. I think that's one of the biggest macroeconomic things that's happened in this country in a long time, and absolutely good news. Trump will impose tariffs, and they will be limited. Yo. Although he kind of backed away, the bigger point is you go onto Google and you try and find out what the tariffs are. Best of luck. Best of luck. And don't ask ChatGPT, because ChatGPT, I think it just blows a fuse somewhere. I said local 10-year bond would get under 8%. Truthfully, we didn't even get, we got to at 8.5, which in the bond world is not close. But we'll look at some charts of that. I said load shedding will stay gone and water gets worse. We had a little bit, I think we had a day or 2 early in the year, but I'm going to pretend I slept through that. And water has got worse. If you live in Joburg, enough said. And then I said the government of national unity would survive, and here we are. The government of national unity did survive. So, I mean, a really, really good set of numbers from last year, but then also I threw some stocks out there, and those were the stocks I was looking at. The UUSMC was an actively managed certificate, local small cap, 18%, not exciting. Mr. Price down 24. It had doubled the previous year, but I really thought we were going to get a bigger kicker from the two-pot inflation down, interest rates down, and it turned out, nah. It turned out that we had priced all of that in 2024, and in fact, some of the retailers did really badly. Advotech up 16 is just a middling return. we'll take it, but it's just totally, absolutely middling. Again, I thought that a better consumer would do better for the likes of Advotech, etc., and it didn't. GLD, which is the local gold ETF, up 50%. Yeah, I don't know what to say about that. Tesla up 23. My Tesla trade was quite simple. Elon Musk, Donald Trump equals Tesla. And then they broke up, and then Tesla still managed to survive. Personally, I don't like Tesla. I think it's been valued as a tech stock, but it hasn't got the tech chops. You know, they're autonomous driving. They're 100 miles behind Waymo, et cetera, et cetera. But, you know, I mean, 23% for a tech stock is actually pretty boring in 2025. Southern Sun, 13%. Modest. Coronation, 28. Calgro, I'd actually said Calgro or Baldwin. Baldwin did better, but I held Calgro, so I'm going to go with that one. Purple Group, yeah, 93%. Yeah, I thought the H2 results were a little bit light. I hold that stock. I carry on holding it. CMH sells motor cars, up 25. ASML, tech stock, they do the ultra lithographic type things. Satrix Resi. Yeah, I mean, if you had told me that Satrix Resi was going to double in a year, I would have called help. And it turned out it more than doubled in a year. What we saw, I mean, if you weren't in tech and precious metals this year, you did okay. You probably did low double-digit returns. Not shabby. But you were nowhere. I mean, you were, you know, our top 40 is, what's the number on the top 40? 38%. Take out precious metals, it's probably 15, maybe 14. And it was the only place to be. And the point is that no one was weight heavy on precious metals back in January. No one in January was saying be full weight to gold miners. Come on, this is not the 1880s. This is 2025. Anyway, if you weren't, you were under trouble. And then the top 40, 38%. The previous time it did that well was 2006, where it did a little over 40%. Now, we all know what happened in 2007, but let's not worry about that too much. Again, it really was a story of tech and gold. And locally, it was gold. If you had gold, I mean, you were absolutely flying. And if you didn't, it was a tough one. Last year, I asked everyone on Twitter what the market would do. They said green. Fun fact, Twitter has never been wrong. And this year, they said green. I don't know. I mean, we could just end the whole thing there, right, and be long this year. So, some burning questions, and there are lots of them. The first is, let's take a small gander back as to what's happened over the last. If we go DeepSeek, remember DeepSeek? Rattled markets, the world was ending. The Trump crypto rug pull, we had Doge, we had Mexico and Canada tariffs within 3 days. We had 3 budgets. Man, I keep on forgetting about the 3 budgets. We had Liberation Day tariffs. The Rand hit 1990. And then we had Liberation Day capitulation. That all happened before Easter. Easter. I don't even know what happened after Easter, because at that point I stopped looking. It's been an insane year. It's been a good year to be in markets. And there's a fun fact here, which you all know, but it bears repeating. Markets are not the economy. I showed you that list and told you that global and local markets were ahead of long-term average returns. You would think something was broken. Something probably is broken, but nonetheless, here we are. But here's my funnest fact. Look at that little picture there. Very nice. I've always been using the DALI image generator for my images in the presentations here since February of 24. And then Nano Banana arrived, and I thought I would try Nano Banana. Nano Banana is the Google Gemini one. It is blisteringly fast, but it is context aware. So initially I said to it, please, I want a picture, 3 months, crazy time. And it gave me that. And I said, yeah, but change the months and change the year. Comes back 5 seconds later, change the month, change the year. You tell that to DALI, DALI will come back with like a pineapple. Nano Banana is insane. It is absolutely ridiculous. That is perhaps the big thing of the year. So all new images now, Nano Banana, thank you for playing. Eskom. So in 2014, when I did this presentation, I put a black screen for Eskom. And then the following year, I got quite crafty and I put that candle. And that candle has been there, first slide, every presentation that I've done for this power hour since then. And then I said to Nano Banana, I said, yo, Nano Banana, we've got power. Can you sniff out the candle and put some clouds in the background? and now we have power. Understand what that does. I mean, psychologically, load shedding was just horrible. And I mean, I don't have kids to feed, and that whole, get them to bed and stuff like that. I had backup power, etc., etc., and load shedding was just horrible. It was horrible for the individual psyche. It was a disaster for business and everybody involved, etc., etc. And it is now largely gone. Some of it, thank you, Eskom, and a lot of it, thank you all who put solar panels on your roof. And then, of course, business who went and said, you know what, if you can't make power, I can. And it's now gone. Problem we have, unfortunately, if we did 3% GDP next year, guess what's back? Load shedding. So we've got to grow slowly so we don't bump into Eskom. Man, oh man, I know, it is what it is. Water, this one is unchanged from last year because it's the same story. It is hard to do at scale. So last year I mentioned that Attack was doing, I think it was Attack is doing at their waterfall mall 5 days of water backup. 5 days is a lot, but no, it's not. I mean, not really. I mean, water can go for way longer. Now we see Hyprop spending a huge amount on it. Electricity is tough to solve. Water is immeasurably tough to solve. It's also, if my power goes, I can muddle along for ages. When my water goes, by day 2, I'm saying to my wife, we're checking into a hotel. Fun tip, every time I tell my wife we're checking into a hotel, the water comes back. Superpower. What can I say? But it's that. It is a fundamentally different game. So water remains a challenge. If we look at Operation Vulindlela, water is now their key focus after. So they say Eskom's largely done. It's now infrastructure and water. We just did a 15 billion infrastructure bond. In other words, we raised 15 billion, but we ring fence it for infrastructure only, and focus 1, 2, and 3 is water. It's not enough though. 15 billion. I mean, come on, I could spend that by Tuesday on water. But at least, something is happening. I'm not even going to, water is not green shoots. To be clear, water is not green shoots. Water is a problem. It is absolutely a problem. And of course, we live in a dry country. So it is a challenge. But let's get to some local indices. So this is our major indices. Top 40 is up 42 and a bit percent. This is from the 1st of Jan. We've got the Resi, as I say, a crazy number. The Satrix Indy up 15%, the Finny up 25, the Midcap up 25, and the property up 30. It was a good year to be invested in South Africa. Property up 30 after it did mid-30s last year. It really was an astoundingly good year across the board. There are some exceptions, and we'll look at those in a moment. And those exceptions are mostly retailers. But it was just people who were buying. Now, if you went in the Resi, it was middling, but middling is fine. Here are US markets. We've got the QQQ up 22. We've got the S&P up 18%. Those are giant numbers. Those are absolutely giant numbers, particularly when you see that their 10-year average for the NASDAQ is 18 and for the S&P is 12.5. The US had a very, very good year. And it wasn't all just tech. Tech was a lot of it. But so where are we on the chart? So last year was a 20 to 30. This year is going to be a 10 to 20, which is where most of the distributions of the returns for the market from 1928 onwards, where they sit. In other words, a run-of-the-mill average sort of year. Stuff's expensive. If we pull out the left-hand side, is the NASDAQ, the right-hand side is the S&P 500. The top chart is the forward PEs, orange, historic is blue, and the bottom one, the purple, is price to book. Take out the pandemic spike in 2020, we're at highs. We are absolutely at record highs in the last decade. And my data doesn't go back far enough. It only goes back into the 90s, so I can't go much further than that. If we look at the S&P CAPE ratio, the Schiller PE, if you want to call it that, the only thing we are lower than is the 2000 peak. Market is expensive. Quick point on the 2000 peak. There's a fundamental difference. In 2000, when companies were doing self-dealing, example of self-dealing, Yahoo invested 30 million into an internet startup, and that internet startup took the 30 million and bought Yahoo advertising. We're seeing that in the AI space. Make no mistake about it. The difference was in that back then, no one was making money. Now people are making money. Microsoft, hand over fist. Alphabet, hand over fist. Okay, OpenAI, but there is money being made. There is a fundamental difference out there, but I'll come to the bigger story in a moment. And everyone says it's tech. No, the top chart is the equal weight S&P 500, trading at all-time highs. In other words, tech is currently, the Mag 7 is 35% of the index, and everyone's, well, that's why the S&P is at highs. Not the S&P is at highs if it's equal weight. The one below is the S&P excluding the Mag 7, which is an ETF you can buy, XMAG. And again, all-time highs. So tech is the driver, but this is a broad-based bull market. It is locally. I showed you those stats for the South African market. There are patches where it's not, but locally it is. And offshore in the US, this is a broad-based bull market. This is not a, look, tech is the fuel, sure. But stuff is up. Costco. Costco is basically a macro that sells fancy hot dogs as well. PE 50, 50. There is crazy, there's out to lunch crazy, and then there's a Costco at a 50 PE. This is a broad-based rally. And the best thing to do with a broad-based rally, own it. Don't be scared of it, just own it. I'm going to skip this one. We are recording. It's just everything there of all the major different asset classes. The fun fact, best return for the year is gold. Worst is Bitcoin. Doing worse than cash. Sure. The only red on that chart for 2025 is Bitcoin. Didn't see that coming. AI, is it a bubble? Yes. Best thing to do with the bubble? Buy it. You know why? Because they go up. When Alan Greenspan said irrational exuberance in 1997, referring to the tech bubble back then, the NASDAQ probably went up 50% the next year and 100% the year after. Bubbles are to be bought and then to be dismounted. We'll get to the dismount in a moment. Let me give a quick 40-second my hypothesis around AI. Is AI amazing? Yes and no. Nano banana, spectacular. ChatGPT, best thing ever. ChatGPT, worst thing ever. I mean, sometimes I was doing something and I mentioned James Earl Jones. So what I do is I wrote an article and I said, go and fact check me. And it comes back and says, you said James Earl Jones is dead. He isn't. He has his Wikipedia page which says he isn't, except when I clicked to the Wikipedia page, the first thing it said was he was dead. Okay. Noted. My cat could do better. At least my cat wouldn't lie, it would just purr. Anyway, here's the thing with AI. Today's as bad as it'll ever be. It's only going to get better. We're all focusing on the hyperscalers and the open AIs, etc. But there's AI doing stuff in movies, in health. For example, AI is detecting breast cancer in women 3 years before medical science detects it. We have no idea how it does it, but it does it. AI is real. The question comes, who makes money off it? And let's go back to the .com in 2000. Everyone was like, we're going to own the internet. We've got a website, aren't we fancy, etc., etc. And the internet just became ubiquitous. It's everywhere. We all have it. The fact that you have internet is no longer exciting. The fact that you're a company with a website. I remember in the early 2000s, publications would write articles. We emailed every company and saw how long it took to reply, etc., etc. It's now ubiquitous. And who wins from the internet? Everything. And I think AI is the same. AI is going to be ubiquitous. But is there going to be a company which is the AI company? I don't think so. I don't think so. But I'll come to more of that in a moment. So, is this a bubble? Yes. When does the bubble pop? So, two things. Firstly, I think the bubble pops when a non-tech company, Coca-Cola, Costco, Boeing, somebody, in an earnings call says we are scaling back on AI spend because we're not finding it giving us a return on investment. Now, MIT did a statement that the Saab referenced a couple of weeks ago, where MIT's research showed that 95% of companies say we don't see any return on investment from AI. But when a CEO of a non-tech company says that on an earnings call, done as things real. And I think that might be the popping sound we're going to hear. And then I'm watching the 200-day moving averages. Get to that in a second. We're going to see IPOs next year. Anthropic, so OpenAI was going to IPO for $1 trillion, which is a staggering amount. Anthropic has now come and said, we're going to IPO before you for 300 billion or maybe 500 billion. OpenAI is B2C and B2B. Anthropic is much more B2B. We're going to see a rush to see who can be the first. Because here's a fun fact. There is no pure AI play on the market. Sure, you can buy NVIDIA, but they make the chips. There's no pure AI play. These oaks want to be first. So how do we know the bubbles popped? So this is not my idea. This is from head of global macro at Citi. He says, quite simple, watch the 200-day moving averages. When your main players, i.e. the Mag 7, when two of them are below the 200-day moving average, your bubble is popping. Meta was the one that was below the moving average, and then they decided that Reality Labs was nonsense and canned that. So now we have currently all 7 are above their 200-day moving average. That is the thing I look at every morning to see if we have 2 below. There are a couple that are close. Microsoft is close. Amazon's almost there. Meta's only just above it. So yes, it's a bubble, but for now, the best thing to do with this bubble is hold on. And that is the weekly chart of NVIDIA to the close on Friday. And that is not a bearish chart. That is a chart that says, I'm going higher. I'm going to take out those highs from November. That is not a chart that scares me. I mean, disclaimer, I hold NVIDIA shares. But that is not, to my mind, a chart that I look at and think this is a horror story. It'll change, and it'll change on a dime. I just don't know when we will have that dime for it to change. So let's come back home. The Rand, the mighty, mighty Rand, as many will say, the Tsar. So the first spike to almost 20 was grey listing, February 2023. The second spike to was Liberation Day, which was April of this year, almost broke 20, and we are sub 17. We are going to 15 bucks. T's and C's apply. What is driving our Rand? Part of it is dollar weakness. Trump wants a weaker dollar because it makes them more competitive. Nice. But there's a lot more to it. Part of it is that our precious metal miners get paid in dollars and now must turn it into Rand. So they are net buyers of Rands. That's what we saw in the 2021 platinum boom. That's another driver to it. Another driver to it is a general move away from particularly the US, more so the developed market economies and into emerging market economies. And in that pile, we're up by the top. I mean, to be clear, who are our competitors? I mean, sure, Mexico, Brazil, but also, you know, I mean, we could argue that they're frontier markets, but, you know, Afghanistan, and I mean, this is a long list of economies, and we're in the top, at least probably quartile. Our bonds, September and October, Kevin Lings put this data point out. He's at Stanlib. September and October, sorry, August and September, the 2 biggest months of foreign buying of our bonds since democracy. As he says, he doesn't count before then, so we could say since forever. Biggest foreign buying. Before they can buy our bonds, they have to buy our Rand. If those carry on, this Rand is 15. Not 2026, it might take 27, it might take 28. And to those of you who think I'm crazy, I'll tell you a little story. December 2001, our Rand hit 1360, 1370. My wife and I panicked. We went and bought white appliances because we thought we were never going to be able to afford them again. That was December 2001. Mid 2006, 5 Rand 75. From 1360 to 575. Now, that was the biggest commodity bull market we've seen in the history of commodities. It was also the 3Ms, Mbeki, Mboweni, and Manuel. We were getting tax cuts. We had plus 3% GDP, in fact, plus 5% GDP. There was a lot happening. But to be clear, 1360 to 575. And if our inflation is 3 and the US inflation is 3, remember, theoretically, your currency weakens by the differential of inflation. If our inflation is the same, that one-way bet that we have lived the last 30, 40 years under, where the rand weakens, might be off. Now, of course, let's be clear, there's theory and there's practice. And the practice is that we weaken by more than the inflation differential. But there is a fundamental change happening, and that's why I say our 3% inflation target is insane big in our country. Think of an exporter. If we're running 5% inflation, their goods go up 5% every year. If they're exporting to America where there's 2% inflation, we get 3% more expensive every single year. Except now we don't. Now we stay competitive. I know, you've got the rand and other factors. Don't count against the rand. Here's our inflation. It's only got 10 years stuff. You know what? We peaked at less than 8% in the pandemic. Developed markets were peaking at 9, 10, 11% if you were the UK. They were having 40-year highs of inflation. For us, 8% inflation? Yeah, Tuesday. Here is our prime rate. And this one, I zoomed out to the 60s. Fun fact, 1998, 26%. I bought a house. So you folks who were complaining about 11.75, you got to come chat to me because I bought it 26. Look, by the time the house transferred, it was lower, and I mean, et cetera. So we're down at 10.25 at this point. With the new inflation target, SARB says that their repo should settle around 6.5, which means long-term average for our prime should be around 9.5, and over time that should come. The pressure will be downward. And we can already see that since 98, that pressure has been downward. We have some brilliant governmental or departments. I don't want to call the SARB governmental, they're independent, but you get what I'm saying. Treasury, SARB, smart people doing the right things regardless. And that picture tells us. South African government bonds. So we got down to 8.315, actually slightly better than I thought. We're trading back at where we were pre-pandemic. We're a long way to go, but we were averaging closer to 10. Let's say we're averaging 8.5 now, which means as we roll bonds, our debt costs less, which means our interest bill costs less. We have a primary budget surplus, which means before interest payments, and I know you have to pay the interest, but before interest payments, we actually have a budget surplus. There are only about a half a dozen countries in the world that have a primary budget surplus. We're one of them. None of them are on the G20. Neither are we right now, let's forget. I know you're all, but aren't we G? No. We're not in the, we're back in the G20 in 27. This is a big news story. It fundamentally helps. It just makes our debt cheaper. And this is the bond issuance that went out last week on Friday. It is inflation-linked bonds. The key point is that Treasury wanted 135 million and got 690 million requests. Treasury wanted 0. They weren't even selling that bond, and there was 260 million requests. And then they wanted 865, and they got 1.5. They wanted 1 trillion, and they got requests for 2.5 trillion. Peeps like our bonds. We don't have default risk. We never have, not since 94. 94, we could have defaulted on apartheid debt. We decided not to. There is no default risk in this economy. GDP. The bar is so low, it's just embarrassing. The GDP is moving forward. If we want to solve our two biggest problems, which is unemployment and inequality, and when I say the two biggest problems, beyond those two, if we solve those two problems, everything else falls into place. Those are the crises for this country. And we solve those with GDP. And we don't solve it with 2% year on year, 0.8% quarter on quarter. We solve it with 3, 4, 5% quarter on quarter. How long is it going to take us to get there? Time. Lots of it. Not next year, not 27, not 28. Maybe by 2030, we can start doing some 3 or 3.5%. If nothing else, if we did it next year, Eskom would say, hold on to your candle. Credit rating, we got an upgrade. Okay, Moody's on Friday did not upgrade us, but Moody's is always moody. And to be clear, Moody's did say that the risks to GDP is to the downside, mostly external. and I don't disagree with either of those statements, except they could have thrown us a bone, but anyway, they didn't. But Standard & Poor's upgraded us, and more importantly, upgraded us to positive outlook, which means that the next review, they can upgrade us again, and then we'd still be junk. And at the next review, they could upgrade us again, and then we wouldn't be junk. Junk is technically 2 rating agencies having you sub-investment grade. Fitch, S&P, and Moody's. We are sub-investment grade on all 3. It's going to take a couple of years to get away from sub-investment grade. But that S&P one was a biggie. Local REITs, property stocks. Last year they did 30-odd%. This year they came back with 20-odd%. It's been insane. So at the beginning of last year, they were cheap. Discount to net asset values of 30 to 40%, yields of 9 to 12 to 15%. Now, in many cases, they are trading at net asset value. Storage, trading at NAV. Hyprop, trading just off NAV. You don't want to buy property stocks at net asset value. You want to buy them at discount to net asset value. Much of the sector, I think, is fully priced. Yields have dropped. Discounts have gone away. There are exceptions. Octodec and others, you've got to go and hunt, but in the smaller place, Vakile trading at net asset value. To be clear, property didn't crash in the pandemic. Property crashed in 2017. That's when it peaked, December 2017, because it was trading at 30% premium to net asset value, which is somewhere between crazy and mad. It then saw some common sense, and now it is trading fair value, I guess. You still get a nice yield, and with interest rates coming down, if you're searching for yield, this is a good place to look for it. Retail, this is our retail sales, 3.1. We've had some big numbers. We've absolutely had some giant numbers. August at almost 6%, back last year, November at just over 8%. What perhaps is most important is that we've had no red since early 2024. The consumer, of which we all are, so we appreciate it, is better off than we were 2 years ago. Make no mistake, absolutely we are. But let's be clear, it's still tough. You know, inflation's, okay, 3.4, nice. Prime is 10.25, that's a lot. We've got to pay over the odds for Eskom. We've got to pay for water and then it's not delivered, so we've got to make a plan, etc., etc. It is tough being a consumer in South Africa. We are holding our heads up and we are buying cars. Man, we are buying cars. Vehicle sales are at decade high. They're back where we were in 2015, 2014. To be clear, we're not buying overpriced luxury German sedans. We are buying cheap Chinese cars. So I saw an Amodo. Is that how I pronounce it? Okay, you all know what I mean. C3 parked next to me in my parking space at home. I looked at that, I thought, nice little car, not bad, lacquer. 300,000. That's cheap. Not like it shouldn't be. I mean, like, to be clear, but 300,000. That's a cheap little car. And that's what's hurting we buy cars, because we buy cars. Sweet spot was a 300,000 Rand second-hand car. Now you can go get a Chinese one for the same price with all the bells and whistles. You know, when you go buy a fancy car and they say, well, you got a car, spare tire, cost you extra. Seat warmer, a little bit more. Infotainment, add that on. And suddenly your car is like expensive. China says, we just give you alles. If we got it, you got it. When BYD released their autonomous driving in brackets, they released it to every BYD in the world. They don't say, oh, fancy BYD, get it. You bought the cheap one. They just give it to everyone. This will change in time, but we've been buying cars. Cheap cars, but we've been buying cars. Here are our consumer stocks. There is a lot in this chart, but let's look at some of the stuff. This is over 1 year. Right at the bottom, Foschini Group, Truworths, Spar, Mr. Price, Pick n Pay, Woolies, Shoprite, 4%. On the top, CMH, Boxer, We Buy Cars, Motors. If we zoom it to 5 years, CMH, clear winner. Disclaimer, I hold it. Spar at the bottom, Pick n Pay, TFG. And then green, Boxer, Price, Woolies, Pick n Pay, Truworths, We Buy, Shoprite, Motors, and CMH. there's been pain in the consumer. There's been spaces where it's done fairly well, but mostly it's been a painful space. And when I was saying earlier that broadly, if you were holding SA equity, you've done well. Yeah, not so if you were in the retail space, it was depending what you were holding, because there was a lot that was not doing well. That was quite very painful. Transnet, again, same slides from last year, better but broken. We're shipping more tons this year than we shipped last year. We're getting more through Richards Bay Coal Terminal this year than last year. We have opened the lines to third-party rail providers, notwithstanding those rail providers might be in for a fright when they get to what they have to put their trains on. They're expecting rails, and well, there might not be. We don't know what they're going to find. But that'll make a difference. The Pier 2 in Durban, the court case was thrown out. The Pier 2 is going ahead, a 20-year deal. Is it the Philippines, I think, the other half of the equation? Durban has gone from waits of over 12 days, at some point 30 days, down to 48 hours. I spent much of my life living in KZN. If you know Durban, you go to Umhlanga, you take that road down to the M4 at La Lucia, and you see Durban Harbour. And I remember as a kid once counting 12 ships in the harbour, and I was so excited because it was a record. Yeah, a year ago, I would be counting over 20. Now, if I go back to Durban, I imagine the number is probably 5 or 6. Transnet's hard to turn around. It's going to be a process. It is going in the right direction, but it's not going to be a quick fix, and it's critically important. We talk around our precious metals, and they're important, but our real commodities is in the industrials, the stuff you sell by the ton. You know, if I'm mining gold and I got 10 ounces of gold, man, I slip it in my pocket and I walk off. All's good. I'm mining iron ore and I got 10 tons of iron ore. I need a train. No train. I put a truck. Trucks are expensive. Improving. Long way to go. Long way to go. Bitcoin, weirdly, Bitcoin had a terrible year. You got to say, Trump is without a shadow of a doubt the friendliest crypto president America is ever going to have, well, until the next one. And crypto is like red for the year. If that sort of 85 breaks, crypto's in trouble. Long term, I have no idea. I own some Bitcoin. It's not a store of wealth. It's not a protection against inflation. It's not a means of transaction. It's not a money. It's a thing. And when it's going up, I like to own things. And this is one of them. Commodities, the green, lots of green, silver, platinum, rhodium, palladium, gold. Gold only comes in 5th. This is year to date. Copper, coffee. Kill a man when he's down. Aluminium, uranium, iron ore, all the greens. And then the reds, cocoa, yeah, love me some cheap cocoa. Crude, Brent, coal, gasoline, wheat, nickel. There's something brewing in the commodity space. Part of it, well, 2 stories. One is, for example, the coffee story, and to a degree the cocoa story, is droughts, fires that decimated growing areas, and it takes 3 to 5 years to re-get those growing areas up and going. The other one is just a lack of investment over the last decade into commodities globally. So if demand sort of starts to peak up at, you know, not massively, but just a little bit, commodities are behind the curve and things get wild quickly. Here is gold. Yeah, I mean, what do we say? Turns out I love me some gold. When I did this presentation 10 years ago, I didn't even mention gold. Did not mention it, because gold, really, who cared? Turned out we all do. It's consolidating, which is what it does best. You can see lots of consolidations. Consolidation a little below, sort of say $3,900 to around $4,300. It could consolidate for months. Certainly the trend is it consolidates between 4 and 7 months, and then every other time it's broken higher. I see no reason why not. Everything that is in place that pushes gold higher remains in place. Central bank buying. Why? Because I don't want US treasuries. Because they saw what happened when Russia invaded Ukraine, and it turned out you could just take your money. It might be Russia, but it was in a bank, and someone said, oh, nice billion you got there, not yours anymore. So gold, because you can put it in your basement. We're seeing retail investors, you and I, who were net sellers in 2024, came to the party in the second half of this year. We see supply constraints. There is new production coming on, but not at the rate at which demand is coming. Remember, every one of those fancy Blackwell chips, Grace Hopper Blackwell chips, has gold in it. Now, less, they get clear. The gold story has not changed. Is it going to double again next year? Look, if it doubles again next year, you'll know, because I won't be here, because I own gold. And if it doubles again, those gold miners that have done spectacularly well are going to do even better. This is one of the best years in record. Best years, 1979, 74 beat us, 73 beat us. But basically, since 1979, we've never had as good a year for gold by a long way, because the previous best was 31 and we're doing 61. We'll tell our grandchildren about this, and they'll say, gold? Really? Quaint. Here are the gold miners. I don't know. I've never seen an ETF double in a year. The Resi did more than that. These gold miners, so let's read some numbers. So gold in ZARs up 46, in dollars up 60, Harmony's up 126%. If we just stopped there, we'd be happy. But no, Harmony's lost. We've got PanAf 201, Goldfields 227, DRD 242, Anglo Gold Ashanti 258, and Sibanye 260%. These is year to date. Not even from the lows of 24, just from the 2nd of January. If you want gold, buy a miner. So Sibanye gives you some PGMs. Sibanye is now about 40% gold. And then, of course, PGMs, platinum and palladium. I like Anglo Gold Ashanti. It's the one I hold. I also hold Sibanye. Buy a gold miner. Remember, Harmony is going big into copper. Don't forget that. If you're buying Harmony, you're buying a gold and copper miner. You might like that. You might not. Your call. Make sure you know what you're buying. Basically, pick a gold stock. And if gold, understand at the beginning of the year, the average gold price that they had received last year was around $2,200, and average cost of production was about $1,650. So they were making, let's call it $500 an ounce. That average cost of output of production, let's say, is now $1,800. It's not, but let's pretend it is. And if gold stays where it is, next year they're going to get 44. They've gone from making $500 an ounce to $2,600 an ounce. If gold stays around 4,000, these miners are cheap. That's the scary point. T's and C's. Harmony is going off to copper and spending money. Goldfields is only returning 1/3 of free cash flow, and the other 2/3, I suppose, parties at the corporate head office. Anglo Gold Ashanti, giving you half of their free cash flow. Pan-African got rid of their hedge, which has helped them, and they're opening up some more trailings down in Soweto. If gold stays at 4,000, these miners are not expensive. Then I'll be brave enough to say they're not going to repeat those returns. But hey, give me 100%. Happy man. Oil, the world is awash with oil. Firstly, Russia is pumping every inch of oil it humanly can, selling it to India and China, because Russia needs money. I don't know what price they're getting. No one does. Doesn't matter. They're just pumping everything they can. They're not getting the $60 that you get on the spot. They'll be getting less because it's illegal sanctioned oil, but Russia is pumping like crazy. Saudi Arabia has decided that some of the OPEC Plus members are cheating. I mean, of course they're cheating. Anyway, and the best way to resolve that is to increase production whilst there is a glut, to squeeze out the cheaters. What do the cheaters do then? Well, they produce more. If the price falls, what do? Well, just produce more oil to offset the price fall. And then, of course, Trump wants cheap oil. The world is awash with oil. Oil is going lower. If you hold Sasol, you are a braver person than me. Platinum, I got to say, I don't fully get PGMs. Apparently, PGMs rallied because the sale of EVs was down and people were buying ICE. Fair enough. The expectations for EVs was probably overdone. The future is definitely EV. But what's important is that we saw a 5-year resistance at about 1,100 smashed, 1,300 taken out and tested, and platinum now trading around 1,600. Our miners are making money at that point in time, and palladium is still well off highs. The story on palladium is that when Russia invaded Ukraine, because Russia is the biggest palladium producer in the world, people stockpiled like crazy. You can see it, the giant spikes in the palladium price, and then they had palladium, and then they started to run out of stockpiles. So they had to come back to the market. I struggled to get a grip on it, except to say that that chart is bullish and that chart is doing so-so. Most of our miners are platinum miners. Sibanye, obviously the exception because they've got Stillwater in Canada, which is palladium, but the South African mines up in Rustenburg are platinum. The palladium is mostly coming out of Canada or Russia. Green shoots. So again, I say to Nana Banana, draw me a little picture of South Africa with green shoots. And you notice what it did. It concentrates the shoots on the more wet areas, and in the dry areas of the country, it puts less shoots. Didn't ask for that, it just did it. I know, I'm in love with Nana Banana. But hey, what can I say? So we're off the grey list, rating upgrade, inflation, rates, Eskom, Transnet, precious metals, tax collections, and the government of national unity is holding, plus a whole lot more. What happened with the budget being cancelled and almost breaking our government of national unity, weirdly strengthened our government of national unity. When they haven't had a fight for like months, like maybe 4 or 5. It's like weird. It's like maybe they moved out. I don't know. The point is our government of national unity has held, and it's held very, very well. We are now a year and a half into it. Next year gets interesting because there's an election, and of course they will have to fight each other while being besties. Yeah, that's why I stay out of politics, because I don't know how you manage that. There is a lot of green shoots happening in our economy, more than I would say we have seen in a decade and a half. I want to be very clear about a few things. The shoots are tiny. You know, when you plant seeds and you come out one day and there's this wave of 1 millimeter green shoots, that's us. They are tiny. They are shoots. They are baby shoots. They also happen to be the type of shoot that grows very slowly. And they also happen to be the type of shoot that if you look at wrong could wilt and die. We're not out of the woods, but we have a map and we can see a light, and we're pretty damn sure that light is not a train. And we haven't been here in 15 years. There's a lot that can go wrong internally. There's a lot more that can go wrong externally. The SARB, in their latest financial resilience survey, I forget the exact name of what they call it, their biggest concern is AI bubble popping, not because they care about AI, but because if that happens, it'll rout emerging markets. Hello, green shoots, gone. So they are quantifiably there, but it is early, fragile, slow days. And then we have an election next year. By law, it has to happen sometime between 2nd of November 26 and 31 January 27. We will not have an election in January. It's just logistically impractical because far too many people are not at home. And I'm not just talking middle class, migrant workers, etc. It won't happen December. It'll probably happen around the 2nd week of November. And the ANC is going to get it handed to them. Here's the thing about the ANC. Love them or hate them, doesn't matter. You know what they do? When they lose, man, they fight. So when they lost eThekwini last time, and they realized they weren't going to get the mayor and everything else, they collapsed the caucus, and everyone had to come home. And they came back 3 days later, and suddenly everyone loved them. But when they can't collapse the caucus and smudge around enough brown envelopes or whatever happens behind the scenes, you know what they do? They go sit on the other side. And we saw that 20 years ago in the Western Cape and in Cape Town. They do respect democracy. And I think whatever you want to say about the ANC, the fact that they do respect democracy is perhaps the most important thing. When they lost last year, they didn't call the soldiers. Okay, you know, we invaded Lesotho once and lost. So like really calling the soldiers is not going to help. But they didn't. What did they do? They called all these peeps and said, awkward. Very awkward. Latest polling, which was on a low turnout, has ANC at around 37 and DA at around 32. Man, next year is going to be messy. I hate election years because anyway, we have an election. International tourism. Sun update from November. Highest occupancy achieved, surpassing World Cup levels of June 2010. That was October. So it wasn't the G20. Keir Starmer stayed with us. Well, okay, he stayed across the road, but it was fun. Never saw him. The difference in that, so that is October numbers. 23, these international arrivals, was 590,000. 24 was 560. 25 was 747. I mean, we know it, right? Because we live here. But if you want to have a lekker holiday, come to South Africa. And if you've got pounds or euros or dollars or anything like that, come to South Africa. Absolutely. Trump, yeah. 1,139 is the number. 1,139 days, someone else is sworn in as the president of America. He has broken 80 years of international norms. And it turns out democracy and agreements are very much more about norms than actually being enforced. We didn't know that. Now we do. I'll give you an example. Canada and America, largest, longest unarmed border in the world. Buddies, best buddies, good friends. Not anymore. Here's the thing. In 1,139 days, Trump goes, someone comes back. Do you think Canada says, ah, all is forgiven, let's be friends? Canada's like, fool me once, not twice. And that is across, that is NATO, that is UN, that is Europe, that is everybody. He has upended the world order in double quick time, like, frankly, I didn't think was possible. Impact, China is winning. Export data for China today, best number in 5 years. Who are they exporting to? Everyone except the US. Because what's happening? So at the G20, South Africa, India, and China had a little meeting. I didn't know it existed. It's called, Brazil. But like all these little alliances that like it's been around for decades, and suddenly it's like, you know, hey, ring, ring. Remember that little alliance we got? Let's make a plan. It's slow. You know, you can't just send your citrus and say send it there. I mean, it's slow, but it is re-ending the world. If we look at every great civilization, going back as far as you want, they've all ended at some point or other. The British Empire technically ended 2 months ago when they gave up one of their islands. Remember, the sun never set in the British Empire. Now it does because they gave up an island, and there's a part of the... But there's no stick in the sand where you say that's where Britain peaked. You know, it was about 100 years ago. You know, they've been on the down since then. But there's no boom, this is it. But we have it with America. 20 January 2025. It's downhill. The shift of power, and this is not new, Adrian Seville was talking about this a decade ago, was happening from north and west, it's going east and south. It's slow, it's going to be bumpy, but it is inevitable, and it is happening. And you don't put that genie back in the bottle. Interestingly, Trump is largely, he's at the end of his days. What do I mean by that? He's a second-term president. Next year, we have midterm elections. He will lose the House. He will keep the Senate. That makes him unable to pass laws, although he doesn't pass laws. He does executive orders. But now suddenly, Congress will start to stand up to him. So there's just going to be gridlock, lawsuits, fiery tweets, and all sorts of chaos. He's not going quietly. But going he is. Costco is suing him. They're like, yeah, dude, we want our money back from tariffs. They wouldn't have done that in February. Marjorie Taylor Greene. Yeah, when you've lost Marjorie Taylor Greene, I don't know who's left on the crazy wing. Supreme Court is going to vote on his tariff policy. They've heard oral arguments. About a 30% chance the Supreme Court will say tariffs are illegal because he's done some tricky, he's not legally allowed to do tariffs, so he imposes some other stuff and then does, Trump's on his way down, but that doesn't mean things are going to get peaceful. If anything, they're just going to get noisier because noise is where it is. China, it's muddling along. Growth is sub 5%. You know what? For the world's second biggest economy and second most populous country, we'll take 5%. Love us some 5%. Housing prices, which have been under significant pressure, have still negative. Year-on-year growth for Chinese housing has been negative for 3 years, but that negative number has got smaller. I know, low bar, but trending in the right direction. Consumer confidence, improving, but you know, you got to look really, really close, otherwise you can't see the improvement. There's the stat, trade surplus 111 billion in November, exports up 5.9% year on year. Don't mess with the Chinese. And Chinese tech is cheap. Hello, NASPAS. There is the Chinese tech ETF, KWeb, 5 years worth of chart. And these are giant companies and only getting gianter. You know who's winning the AI war? Forget America. China's winning it. Why? Because two things. Mostly they open source their stuff, DeepSeek, etc., etc. I can run DeepSeek on my laptop. I don't, because I worry about the Chinese spying on me. As I say that, they don't care about me, do they? But more importantly, what's the big bottleneck for AI? Power. NVIDIA has a data center outside San Francisco that was completed in February and hopes to get power by March 2028. China's got power. It makes it cheaper. It makes it faster. If power is what drives AI, China has it. Europe, I mean, love me some croissants and cheese, but Europe. So the big story in Europe was defense stocks, Rheinmetall and others, etc., etc. Germany's going to start spending on defense. We've seen that before. You know how it ended. But I struggle to get excited about Europe. The chart is interesting. All-time highs looking to break higher, sure. UK, yeah, I struggle to get excited about the UK. Again, a chart that's breaking higher. The world over, indices are at highs, percent or two below. This is a bull market. This is a bull market. And the thing to do with bull markets is be on them. So, some 2026 predictions. Gold's going to go higher. We'll make a new all-time high in gold. I think we can hit 5,000. We're not going to double again. You know, a world in which gold is $10,000, man, you don't want gold. You want water and pumpkin seeds because stuff got bad. But 5,000 gold, yeah, we can live with that. And if gold just goes sideways, as I said, miners are cheap anyway. GDP, yeah, I mean, growing, but we're not going to get more than, Treasury is looking for 1.8. They're always optimistic. Most of the big banks are looking for about 1.5, 1.6% GDP next year. I'm not even going to say nice. I mean, it's a horrible number. It's better than what we've seen in a decade and a half, but it's still a horrible number. The rand, we're going stronger, 1650s this year. If everything carries on, 15s in time. I mean, respected technical analysts that I know, Njabula and Zabandi saying 1365. The lady on Twitter is saying 12 and change, but they're talking long-term out. To be clear, it doesn't happen in a straight line. It gets bumpy. Every time it gets bumpy, my DM's full up. I told you so, but hey, whatever's. Top 40 will be green. Barring, the key thing is, and I'll touch on AI in a moment, the assumption I'm doing here is that the AI bubble does not pop next year. And that might be a big if. But the point is, if I stand up here and tell you the world is ending and markets are going to crash, I mean, those are both true statements. The world will end because one day the sun goes out and our markets will crash. I don't know when. The point is, I don't know when that happens. And it's easy to grab the headlines and to say it's going to happen next year. But if I've been doing that for 15 years, I would have been right once, and it would have been 2020, and because of a pandemic, and not because of the reasons I've said. We have to, as investors, almost, what's the phrase I'm looking for? We have to have a bit of delusional optimism. Maybe that's the phrase I'm looking for. We have to think things are going to be okay. Because if we think that things aren't going to be okay, we go into cash. I have a good friend. He went into cash in May. Markets are up 40% since then. He's sitting in cash. If the market now crashes 50%, it's still higher than when he went into cash. I don't typically keep a lot of cash. My portfolio, I mean, I get dividends coming in, etc., etc. Some people are like, oh, I'm upweighting my cash. No, man, I'm invested. I'm in this market. There's risks. But there's never not risks. I've been doing this presentation for 13 years. There's never not risks. This time it's AI. Something has always been out there to scare us. And when markets crash, the best thing to do, turn off your computer and go to the beach. And we all live in Joburg. How sad is that? I think we'll get more rating upgrades, but we will still be junk by the end of next year. but we will be going in the right direction. I think we'll get another S&P, and then either Moody's or Fitch, one of them, maybe both of them. So we'll get some more upgrades coming. I think at least 2 cuts locally for prime, take us down to 975. I can't see 3. I really can't, but I can see 2. And I think the US will get 2 cuts next year, and I'm assuming that they're going to get a cut on Wednesday. So between now and the end of next year, I think the US will get 3 cuts. Trump would like a lot more. We'll see. And the problem is US inflation is that, as I said, been above target for 5 years now. Now, unless the FOMC has just moved on from it. And of course, Jerome Powell and all of that and firing. But remember, there are 12 people who vote. I mean, firing Jerome Powell's lacquer, but there are 11 more votes. Okay, and he's got the other person in, so now he's got 2. It's a long way, and the labor market is showing some weakness, but unemployment below 5% in America is not weak. Not even close, not even slightly close. AI bubble, I think we're going to do lower returns than this year. I really do. I don't think we're going to pop next year. I don't see it happening, but I do think we're going to get lower returns. I think there is going to be at least 1, probably 2 AI IPOs. They're going to be the 2 biggest IPOs in the history of markets in value terms. OpenAI wants to do it at $1 trillion. Yeah, so here's how to play the IPO. If you can get IPO stock, in other words, before it lists, get it. Because what they're going to do is they're going to price it clever. They're not going to do what Optasia did, which is price it and the thing goes up 3%. They want it to pop, because if your stock pops 40% on the day of the IPO, or 60 or 70%, for the rest of the history of that company's existence, people talk about, oh, remember the IPO, 70%. The bankers want to leave some pop on the table. So if you can get IPO stock ahead of the listing, grab it. And then be a quick seller, because the rule of IPOs is typically pop, fade. So the clever traders get their IPO, pop it, sell it, wait for the fade, short it. Figma, hottest IPO of the year, down something like 80% off the highs, 80%. And this was an exciting IPO. So we're going to see some crazy numbers. US market struggles. I think they can end the year green. It depends how much Trump juices things. Emerging markets, I think EMs are going to beat DMs. There's a lot of ways we can play it. We are in EM, so we are invested heavily in an emerging market already. There are local ETFs, there are offshore ETFs. Pretty much for about the last 20 years, DMs have beaten EMs. I think that is shifting. I mean, they complain about South African debt to GDP. We might get to 80%. Japan, 220. Europe averaging 115. America, 120. We're 80. Excuse me. Yeah, some real troubles out there. Brent below 60. The world is awash with oil. And that Netflix Warner Brother deal will be blocked. It is not happening. It'll be blocked because Trump's friends didn't win it. It'll also be blocked because what you then do is create a monster who owns all the content. And that can't be good either. So those are my predictions for next year, my stocks for next year. Gold. So my preferred is Anglo Gold Ashanti. You can just buy the GLD ETF. You can buy it in ZAR. You can buy it in Shift in US dollars. Pick yourself whichever is your favorite. If you think that you want something a little more juicy, Pan-African. But you know what? At these levels, whether you're making $50 more or less, man, you're making so many dollars, it's rounding errors. Satrix ready. There's a world in which commodities have a good time. I'm cautious on this one, but I put it there. As I said, there's been massive underinvestment in commodities the world over for the last decade, and that is across the board with commodities, pretty much everything. And it's not because I'm seeing a demand surge. It's because if commodity demand has been growing at 3% a year over the last decade, it's now up 50%, but capacity is not. And that puts price squeezes on. Are we going to do another 100+ year? No, come on, surely not. I don't know. I hold the Satrix Resi. I was early. I got it beginning of last year. Looking smart. I still hold it. I haven't trimmed. I have trimmed some of my Anglo Gold Ashanti. Simply because at some point it just becomes so much that I'm going to get a board seat and that gets complicated, so I decline. I like SA Retail, SA Inc., although it is you know what, I said this last year and I was horribly wrong. And there's a chance I'm horribly wrong again. I hold Mr. Price. I like the low level ones. Look, I mean, Lewis is just basically a bank that masquerades as a furniture store. But if you look at the valuations on Lewis, what's the PE? 5-ish. What's the dividend yield? 10-ish. And these numbers are crazy. More, correct. The numbers are absolutely crazy. Oh, but they credit. Yeah, but you know what? These guys have been doing credit for longer than I've been doing breakfast. They know how to do credit. Pepcore, because they're at the low end. Mr. Price, because they're at the low end and more cash. Both Pepcore and Mr. Price are more cash. I can't decide between the three. I hold Mr. Price and I plan to buy some Lewis. I'm going to wait for it to go ex-div, which I think is only next month, weirdly. Roynet. So the thing with Eskom is now that we've got all these people building solar panels and stuff, we need to hook them to the grid, which means we need transmission lines, and that's a bottleneck. And what does Roynet have? Cables. They have three things. They sell defense stuff. Always cagey about exactly what, but anyway, defense stuff. They sell electrical stuff like switches and stuff. You can tell I don't know what I'm talking about, but you know what I'm saying. And with people building power all over the world, good business. They have like Nashua, which is photocopies, which is like, really? But in an economy that suddenly goes from 0.5 to 1, well, maybe you need a few more photocopiers. And then they sell cables. Roynet, and it's come under a fair bit of pressure recently. As I say, emerging market ETF, local or dollar, either's fine. And then, come on, don't do this to me now. I like leisure. I think my pick is Sun International because I worry about the casino side. Southern Sun's doing great, but surely, please, if there is anything good in this world, we start to push back. Yeah, I have no problem with gambling. I would like to ban gambling, but I believe people have freedom. But here's the fun stat. I have a friend who was really, really good at making money doing internal bets on T20 games. And he would swing 10 to 20,000 on a bet. And he was making lots of money. So what did they do? Limited his bet size to $100. On Friday, I was chatting with someone who does it in-game on rugby. So if the Springboks are playing someone and the other team scores first, the odds on the Springboks winning collapse. It's like, have you never seen the Springboks play rugby? And then he bets big, and then the Springboks win because they're the Springboks, and they throttled his account to 10 Rand per bet. It's one thing that you are a gambling site. It is another thing that you say, yeah, the winners, you go there. Anyway, there has to be pushback. And to be clear, charging a 20% tax is not pushback. It's revenue generation, sure. You know what, the first step, ban advertising for gambling. Simple, done, move on. Anyway, I like Southern Sun. City Lodge would be second. Sun International is attractive. I don't like the gambling. I worry about it. At some point, something has to happen. Calgary M3 or Baldwin, people need houses in this country. They're both well positioned. Rates are down. Calgary is my pick. I hold it. Baldwin's looking good as well. Slightly higher LSM. Calgary's got flexibility. Both of them are getting to a point where they have got their head office fees basically covered by annuity. In the case of Calgary, Memorial Parks, Baldwin, things like fiber and that sort of stuff. Purple Group, PSG Financial Services. Again, what are we looking at here? If you are a stockbroker in a bull market, you are doing well. PSG Financial Services is the more conservative one. They've got wealth products, etc., etc. Nice little business. If you want to have a wild ride, Purple. But be clever on Purple. It looks like it's going to go below 2 Rand, so don't rush in with fools fear to trend. Combined motor holdings. There should be an asterisk there. There should, because I hold it. We're buying cars. We're buying Chinese cars. In their last set of results, half of the cars that CMH sold were Chinese. Half. And they've got a very, very good vehicle hire. And I can't remember what it's called. First Fleet? Something like that. Tourists are coming, they're benefiting in that regard. Amazon, I like Amazon for longer term. Jeff Bezos, Andy Jassy rather, the new CEO, they expect using automation, not AI, but robots and automation. He says that they can double sales via Amazon between now and 2032, and their cost base remains the same. Their margins are going to start doing that. They've also got their own chips which are not competing with NVIDIA. They're simply not good enough, but they are certainly able to do inference. You can see Meta doing some deals with the Google ones, etc. They're not the top end range chips, but not everything needs to be top end. And I think they're quite well positioned as well. NASPAS, if you like China tech, if you think China's got a place, NASPAS is down from 25% since the share split, trading around about $1,000. I like it. That the trick is it's been under pressure because they've been pulling back on their share buyback program, but that's fine. NASPAS, massive discount to Tencent, and Tencent is more than just WeChat. It is like tons of stuff. They're also making their own chips, and they've also got data centers, etc., etc. Here's the problem: when you say to China, you can't have our chips, China says, okay, we'll make our own. And it takes time, to be clear. But to be clear, they make them. Banks for the boring. Our banks have had a good year, but our banks are not expensive. I'm not convinced about the FINI 15 ETF because of all the property in there. I said earlier, I think that's expensive. But our banks, ABSA trading update today, not bad. And as someone said to me, I'm on TV in 5 minutes. So someone said to me, my TV show, they were like, you know what, this is the first time, I'm not leaving, it's recorded. They said this is the first time that there were no ugly bits in the ABSA trading update. Our banks are all well positioned. Capitec, no. I'm talking the ABSA. So at the bottom of the pile, you've got ABSA and Nedbank. In the middle of the pile, you've got Standard Bank, and then you've got First Rand at the top. If you've got ETFs, you've got tax-free accounts, carrying on. You're back next year, ladies and gents. February, ETFs, tax-free. We'll be back here again. And then it's fireworks. I am 4 sleeps from holiday. I hope so are all of you. To everyone on the webcast, thank you. To everyone in person, thank you. To Edition and Standard Bank, thank you all. As always, look after yourself. If you can, look after somebody else as well. Thank you, everybody.